optimistic are you on approval of this product?
Hi, Galen. Thank you very much for having me. Yes, pleasure to be here. We're very optimistic that approval will be granted by the SEC because the SEC has consistently stated that it wants to see certain safeguards in place, particularly information sharing between the listing exchange of an ETF and crypto exchanges. That bar has been very clear, and we believe that bar is being met by the provisions that collectively we have all put in place.
I wonder what the surveillance really means, Sui, in this case. We've heard that in a number of filings now. Vildana's been writing about it. We just talked to her. How do you see surveillance of a spot Bitcoin ETF as any different from surveillance of other commodity ETF products?
That's an interesting question, Matt. So traditionally, commodity ETFs, the commodity markets, the spot commodity markets are not traded on organized marketplaces. Spot oil, spot gold is negotiated over the telephone, via email, via chat, etc., not on an organized marketplace. So historically, commodity ETFs, the listing exchanges of commodity ETFs have information sharing agreements with derivatives exchanges because that's the organized marketplace where transactions happen. Crypto is a little different in that spot crypto, physical spot crypto, is traded on organized marketplaces such as crypto exchanges. And hence, we haven't quite been here before. There's no exact parallel. However, in the relationship between spot markets, ETF markets, and derivative markets, that is a well-trodden path through something called the ISG, which has existed for a number of years now. And this is a forum by which ETF listing exchanges and derivatives exchanges share information.
So a lot has been made, for the past decade about the public blockchain, Bitcoin blockchain, and the fact that you can see exactly where all of the Bitcoin goes from wallet to wallet. Even if the accounts are pseudonymous, you can still see the numbers. Is that the kind of data that you're going to have to be watching to make sure that you don't buy blockchain from criminals or release any to criminals? Is it just really a deeper KYC using on-blockchain analytics?
Well, I can't speak for the exchanges that are listing the ETFs and exactly how they will monitor and surveil the shares of the ETFs that they will list. I'm sure that they have very deep and detailed processes. But it could include that. It will also, of course, include being able to share information on exactly who has been trading the shares of the ETFs and who has been trading Bitcoin on those markets of significant size.
Well, Sui, the SEC's concern historically has surrounded the idea of potential manipulation in the spot market. You at CF Benchmarks literally track spot pricing. Have you seen any evidence of that?
I think that we, as an FCA-regulated benchmark administrator, we actually have a burden upon us, an obligation to surveil our benchmarks, to ensure that our benchmarks are free of manipulation. So we have policies, processes, systems in place that have been approved by the FCA here in the UK for all of our benchmarks that we publish. Now, as you know, the Bitcoin reference rate has been published for 7 years now. And for almost 6 years, it has been used as the settlement mechanism for the Bitcoin dollars futures contract listed on the CME. So we have settled over $500 billion of CFTC regulated derivatives contracts listed on the CME using our benchmarks. And we have never, ever had an instance of the manipulation of our benchmark.
Okay, never ever. That's the direct quote. Finally, if the SEC is able to put aside those concerns and ultimately does grant approval to either BlackRock's product or another that has filed for approval over the course of the last month or so, Sui, what do you think the real difference it's going to make is? How substantial will the impact be? Because it's been a lot of hype. I just wonder what actually happens if it happens.
Well, obviously, Kelly, that is the some large number billion-dollar question. It's very hard to know just how much demand there is. But if we look at, I think we can kind of triangulate to that number. If you think that ETFs are the wrapper of choice, they are the vehicle of choice now for investors in the US, regardless of whether that's private wealth, whether that's long-term savings in the form of a 401k, et cetera, et cetera. ETFs are the wrapper of choice. And about 50 to 60% of all US investors hold an ETF, at least one ETF in their portfolio. Now, you put that next to the fact that 20% of American investors now own crypto, physical crypto. So you've got 80% who still don't. And that 80%, if you cross-reference that with the 50 to 60% that own ETFs, if you have a Bitcoin ETF, a spot Bitcoin ETF, well, you do the math and you come up with a pretty big number.